All right, we should be live right now, Mr. Chopra. Let's see here.
All right. Thank you, Mr. Eckstein. It's wonderful to be alive. Today is the day. Now is the time to get the job done.
All right, let's just see if that we're showing up. Do you see us live on Facebook? Is it showing?
Yes, it is. It's showing really well. You're looking good. It looks like, we are all looking good here, which is great. I was just going to see my eyes. If I look into the camera of my iPad, my MacBook Pro, then it's not a good thing. Now I can talk right into the camera right there. How is everybody doing, guys? Vinney's back. Beau's back with the Vinney and Beau Show every Friday. Sorry, last week we couldn't do it. We just couldn't do it. We were traveling, and I was in Orlando, Tampa, Melbourne, Jacksonville, and then Houston, Texas.
Right. We should be live right now, Mr. Oh. Sorry. All right.
That's all right. No. So let's talk about, how was your week, Beau?
Yeah, it was very good. We're working with some of our friends out there, and we're putting together a lot of bridge loans on multifamily. So that's also great, right? Like
Totally.
my daily job to be able to network with people that are, I'm starting to network with more big commercial lenders that do, 50, 60, $70 million multifamily loans.
Awesome.
And now I'm able to kind of fill the void on their smaller stuff. We can lend up to 50 million, but primarily we're in the $1 to $10 million range on multifamily. But we're working on a 198 unit, a 48 unit, and some portfolio loans too. We do portfolio loans on single family homes, so we get borrowers. Some of them, it's amazing, they have like 600 or 700 single family homes that they've built up. But so we're able to lend, and we can do loans on 100, 200 units and with one loan, which blankets all those other properties. So a lot of good stuff going on with that. I'm enjoying that. I'm starting to reach out, right, from all the networking we do.
Yes.
So I actually just reached out to Dylan, and I complimented him on his growth. And Dylan, if you guys don't know, was a student of Vinney's, and he's like 22 years old, and he's a part of, like, I don't know how many units he's in now, but
you're at 50 million mark, maybe 1,300 units, something like that. Yeah. The exciting part was, Beau, I was there with him last weekend, by the way, in Orlando at Jake and Gino, good friends of mine, very good friends. And Dylan is with them now. And we were crushing it. He and I did 1 hour, I think, session on the stage in front of 551 people. So it was exciting. A lot of raving reviews happened. And I think maybe some portions of that might be available soon also. So it was exciting. It was very exciting. I do want to let you know, Beau, what you're telling me now with your, you have been a great mortgage broker. Amazing. And I teach that in my academy to all my students. They got to have a good team player on their team who will get them the loans. So I'm going to send a lot of people your way. I'm going to coach that like I do on Wednesdays, and bring your information. Please send me email, everything. We're going to pop it up and let them all start, because they're starting to buy now, which is great. After a few months in my academy, they're getting the underwriting done. And some of them even traveled. Solomon traveled all the way from Ontario to Orlando with his team, went to see Jacksonville property, 96 units, I think, or something like that. Then Dumel just texted me. He says, Vinney, this positive energy is making a difference. I think he's got 48 units coming on the line. So, Beau, I want to have you connect with both of them. I'll give you their address and everything.
Oh, number. Thank you. Yeah.
You bet.
And that's what it's all about. Going back to Dylan, when I first met him, I was so impressed, because what he did, he knew what he wanted, right? And then he sought you out, right, to be a mentor. And what I liked how he did it, he wanted to provide value to you, not just hey, teach me. It was using what he's learned in his even though he's a young guy, he's learned a lot, but he was really smart on how he approached you.
So
And then, you helped him on a few deals. You taught him strategies and
surely.
so, if you look at it, that's what you really need to do to be, you can see him in 20 years from now that he's going to be a big shot. He's going to be the guy that got thousands and thousands of units, right? Because he's got that mindset. He's a student. And I messaged him yesterday. I'm like, man, I'm impressed by you at such a young age to be so disciplined. But he was smart about it, and he sought the right mentors, right? And that's the key here.
It helps a lot. It really does. I mean, where I am today, I definitely want to thank my mentors, my coaches, who spent so much time to ingrain in my mind, hey, that's how you look at the area. That's how you look at the neighborhood. That's how you analyze. That's how you look at the pros and the cons of any kind of property. That's how you look at the exit strategy, right? And that's how you plan, because you're entrusted with the money of your friends and relatives and people around you. And you got to have, it's a business. It's not just a, hey, let me dip into it a little bit, get me the free stuff from the internet. That doesn't happen much, But the thing is to get a coach to learn the techniques and the skills and the worksheets and all, and the whole mindset is so important, So encourage everybody to get a mentor, me, whatever, or anybody. There are lots of great ones. Make sure you see their track record, what they have done. Are they doing it deals? What you want to, where you want to go, right? If nobody has taken to that step themselves, how can they teach you? That's how I look at it. They need to walk the talk. Walk the talk, I think is the word.
Yeah, no, that's very true. So just tell me about Jake and Gino's event. How many people roughly?
Amazing. It was amazing event. And, the good thing is I love the whole camaraderie, the whole family, demeanor of Jake and Gino. So they are vertically inclined like myself, Monil Investment, Monil Management. We in-house property management and everything. Same thing is with them. We have also educational academy. They also have one. The other good part I loved is they also really emphasize the whys. What are the whys of you really doing what you want to do? If you're happy with W2 job, then it's okay. Stay there. But if your whys are bigger than what you are doing right now, you got to write them down. Have a game plan. Have a coach. Have a mentor who can press you, who can hold you accountable. And then family value. I thought that's something I really appreciated, Jake and Gino. That's what they're building with their team, with their camaraderie of all the, student village kind of thing. And I loved, Gino's wife and their kids. They were so loving, so loving. That's a fond memory that I brought back with me, that they were there, selling the t-shirts and other stuff, which is great because family needs to get involved to accomplish. Then they see dad, mom, what you're doing is worthwhile. It's more to really get them also into the entrepreneurship mind. That's the word. Entrepreneurship mind. Today, I would love to share with you. I just saw my doctor, very good, my regular checkup, and I'm going to be sending 3 books to him, to his children, because this is the right age at 16, 17, 18 years of age. Anybody listening to me, please go to Amazon and get Robert Kiyosaki's Rich Dad, Poor Dad book today for your family, for your kids. Right away, please do that. Eckhart Tolle, Power of Now. Please get that book right away. That's the least you could do, $9, $10 at Amazon. It's going to change your world, your kids' world. It will be changed. The third book I will highly, highly recommend is Miracle Morning by Hal Elrod. What a great book it is. It's changing my life. It's the biggest thing is how we start with the right mindset in the day, every morning, how we do exercise, how we pay gratitude. That's the word. we many times don't take 10 minutes to ourselves to just feel the energy around us and how it's expansive, not expensive, but expansive or abundant. It is the positive energy and all the feelings. Gratitude is such a big thing. We need to do that every morning to the people who brought us into the world, to the clients, to our team members, to our prospects, to our investors, to brokers, everybody.
That's good. I mean, as I get older or wiser, I realize the importance of really continuing to learn, continuing to read. Like I just had this book on Audible, and it was very good. It was called "There's No Plan B for Your A Game" by
Oh my
Beau.
gosh, I love that. Oh my gosh, I need to get that.
It's a
Yeah.
very good book, but basically he tells a story of how he made a declaration at an early age, and he wrote it down.
Yes.
He walks through how he did it, but he made a 20-year plan to be a professional football player, and he was like a small guy and like came from a small town. It's just an amazing story. Then after he played pro football, he got hurt, and then he made a declaration to be the best like actor, stage actor, and it just how he did it. So it got me to think like that's true, right? Like whatever you do or want to do, right? If you want to be the best multifamily syndicator, you have to make a declaration to be the best multifamily syndicator, and it should be a 20-year plan. And each day, that's your if it means not going out to a party because you're working on your craft, right? And so that's what he did. And his son is like 9 years old or 12 years old now, and his son's declaration is to be the first NBA basketball player and football player professional. So he set the declaration for 20 years out, and so I think that's smart. So it made me to think like, okay, if I want to be the best, multifamily bridge lender in the nation, right? That's my declaration,
Yes.
and that's 20-year plan from now. Every day, you gotta work on your craft, right? You gotta like practice hard. And there's an example of like Jerry Rice in practice. They were throwing balls to Jerry Rice, and he would run his pattern. He'd catch the ball, and he'd run full speed. And then after he caught the ball, he'd run up, 50 yards to the end zone every time. And he did that all practice. Bo Easton talks about it in his book. He did that all practice. Bo said, "I've never seen anything like it." He must have run 10 miles. But that's the reason why he was so successful, because it was, and it's the same thing that I see in you, is that you have you have a one track mind, and it's your passion, right? And that's why you've been able to scale and be successful, right? Because we have a lot of people that dabble out there, but and I was a dabbler. I do a little this, a little that, but I've learned like I'm making my declaration of right now it's to be the best bridge lender there is, to make enough money where I can invest and then become a GP and an LP in multifamily properties, right? Because that's what's going to start paying me every month, where I can do what I really want to do.
Yeah.
So that's my declaration.
When you sleep, I want to add that in there, Bo. What you're saying is so right. I mean, multifamily, I know single family, a lot of people listening to us probably today, they might have really got burnt, having a single family, or the tenant problems, or the toilet problems, or the trash problems, like we say. But, get that erased from your memory, totally erased from your memory. And you say, hey, I want to become equity investor partner with somebody, not in a REIT, see, REIT, that's big game. I mean, they just give you 3, 4, 5%, whatever. And the stock market, you have to buy them through the, the big Wall Street firms. But the good part is to really self-direct your retirement money. That's what it is all about. Self-directed IRAs, 401ks, kiosk plan, solo, plans, whatever. And then you could invest them to get great returns, not 3, 4, 5%, but equity returns, and then be able to have passive income coming. That's what we were talking about, right, Bo? So passive income, streams of passive income is the real way to financial independence. I mean, it's W2 job, doing the best in that, getting an entrepreneurship mind, and then seeking out where are these great avenues to invest money.
Exactly. And that's, yeah, that's key. That's definitely key. And you know, it was like when we had lunch with Adam,
Yeah.
a couple weeks ago.
Yes.
Oh, he sent you an email too. I don't know if you saw it, but
oh my gosh, I will. I'll respond to it. I've been gone like 9-10 days.
yeah, I know. So he just wants to see, you know, some more information and stuff.
Totally.
But there's, you know, it's a perfect example of somebody who's been in the you know, software sales and management, but you know, now he's at a position in his life where he can make, you know, he wants to make his money really work for him, and he's looking to like 10 years out, you know, where he might be able to exit out of the software business, and then find syndication deals where he can make his money really work for him, right?
Totally.
And so what I told him when I met with him is that, you know, one thing is he's been really good with his money. He's a good investor, you know, from a Wall Street perspective.
Yeah.
So he's done quite well at his, you know, he's my age, so he's 40 years old. You know, he's 40, I'm 41.
Mm-hmm.
But you know, in 10 years time, he's going to have a bit, you know, by then he'll have millions and millions of dollars. You know, I'm sure he's got a good net worth right now, considering.
Sure.
So he's able to deploy those monies, right, into different syndications, right? Because he doesn't necessarily want to be the operator.
See, that's the thing. That's the thing. You're so right. You know, a lot of times people feel that we can only get high returns or above average returns, like we say, by being actively involved. And that's not the case. Actually, a lot of people who are investing into syndications and real estate or in my company or like that, they are passively involved, but they are equity partners. See, that's the exciting part. They own part of the syndicate. They own part of the apartment complex that we purchased for 30 million, 40 million, 50 million, like that. So they are on their title operating agreement. They are members of that LLC that purchases, first of all. Secondly, they are getting all the benefits of owning it because of the cost segregation, the taxation laws, because the LLC that buys the apartment complex, it's pass-through entity. So 70% or 80%, actually, the new deal, we are giving now 80-20. My gosh, why not? I mean, we are doing all the hard work, but we want to make sure that our investors are well taken care of. So we're giving 80% to them. And the good part is we're going to write off millions of dollars of the capex and also the different cost segregation amounts just first year. And it's ridiculous. You know, I mean, the investors get the cash flow, but their K1 shows negative, you know, passive loss of hundreds of thousands, you know, like that. So there is just a great avenue. We have a vehicle, like you said, Beau, in the syndication world where you could literally own passively a piece of the action and be really happy with it. Yeah.
Yeah. And then somebody that wants to be good, right? Like a good investor, passive investor, right?
Yeah.
They're still going to be studying the literature. They're going to be looking at the offering memorandum. They're going to be asking, why should I put my money in this project? Why should I put my money with this this partner in the deal? What's his track record?
Right.
And why are they buying in Florida right now, for example? You know, and then let them research the offering memorandum. They're going to start Googling around just like everybody would do, and they're going to say, okay, well, what's the population expectancy?
Yep.
In Orlando, what's the growth rate? What's the job outlook like? What's the you know, apartment rent forecast for the next 10 years? They're gonna dive in, and they're gonna like cross their I's and dot their T's on what they're sent, and they're gonna look, right, because even though they're a passive investor, they need to know what they're putting their money in, and so they can expect. They need to know what type of asset it is. You know, it's an A asset. Is it a B? Is it a C? Is it a C minus? You know, what's the deferred maintenance? What's the capex? How does that work? You know, what? And so they just need the general understanding, and then if they can kind of get the kind of the why I should invest in this first is what is the syndication?
Yep.
Why would I invest in a multifamily syndication? What am I looking for when I'm investing in a multifamily syndication, right? It's almost like there could be a one-day workshop where people with money should go and they could learn about where they should put their money, what they should look for. And obviously a big thing is experience and track record, right? Like if somebody's gone to bat 27 times and there's been 27 exits or 15 of them have exited all successfully, then you can say, okay, this person, this company has a good track record versus it's somebody's first syndication deal and you're investing in that. Obviously your risk level is going to be higher no matter what. And also your risk, and this is just from the outside looking in, your risk level on like a C- building versus like buying a stabilized property where you're just doing some basic cosmetic and bumping rents $100 versus you're buying something that's in the low 60s occupancy and your plans to get it to 85 in the next 2 years. And then, as you know, anytime there's construction or tenants that you have to move, and there's going to be, so you got to know where you right. Like, yes, if that C- property performed, executed based on that, you know, on the pro forma, yes, can you make a higher return putting your money in something like that? Of course. But there's also a higher risk level, right? Versus buying a B or an A class property with very, very low maintenance and very little turnaround. So it's good for somebody who's got money and wants to make it get above average returns, but they got to know, yes, I'm going to put one in a C- building with this operator, but he's got a great track record of doing these value adds. And I'm going to put some in these properties where there's, I'm hedging my losses. I'm still going to make a great return, but the downside is it's not as great. Because there are horror stories out there, right? And there's times when syndicators make what we call cash calls, and then the investors have to put up money. So you just got to be aware of where your money's going in. So if you're out there and you have money, your best bet is to educate yourself, even if you don't want to be the person putting the deals together, but you're going to invest in these properties, is to start questioning and asking, and then making an educated decision of where you're going to put your money.
So true, Beau. It's so, that's the field I've lived in the last 14 years or so. And the good part is the SEC ruling, Securities and Exchange Commission rules and regulations are very strict. And that's what you want to make sure anybody you are investing with, that they are following all the rules of pre-existing relationship, or if they are doing 506C, that is with anybody, if they are able to advertise and things like that, that's in 506C. But the ones which is most of the people are using is 506B, which is with pre-existing relationship. So make sure that, you're not hit with a deal right away on the first time. You should watch them and tell them, hey, you just came to know me. I know that you cannot show me the deal yet. You will really, really safeguard. You'll just, they're going to have so much respect for you. I'm telling you, because they will know that, and they should not be doing that. So that is pretty important stuff. We always say we got to have the investors lined up. Then in the future, when a deal comes, a good one, you underwrite it well, you put an investor packet, everything, then you show them. Then while we're doing the due diligence and working on the financing, then our attorneys, syndication attorney, SEC attorney, securities attorney, we call it, they're working on a complete legal document, which is the PPM, like you just alluded to that, private placement memorandum, that's PPM, and operating agreement, which is OP agreement. And the third document is very important document, subscription agreement. That's the legal document which explains all the questions that need to be filled out. And then, the entity that's going to come into the property. Are you going to come yourself with your spouse, or through trust fund, or through IRA, Pensco, or equity trust, or all like that, right? So, but be sure to see the whole packet. Make sure you understand all the jargon in these packets and also the financial implications as to what their assumptions are. That's a huge thing because nowadays people are doing some funny things with assumptions, and you can look numbers look better, but if they are not, what's the word? They are able to tweak some assumptions which can make the property look better than it is. That's what I'm trying to say. So be sure to really dig into it. Make sure that their assumptions are correct. Yeah.
Yeah, exactly. And so, that being said, I mean, when you're looking at these like pro formas on these acquisitions of properties, and they're giving you a 5-year forecast of like, hey, I'm buying this property. It might be in the low 70s as far as occupancy. It's like a C minus or a C building, right? It's built in the early 70s, maybe late 60s. So, I mean, you're looking at this plan, let's say it's a syndicator bringing you this deal. You're looking at the plan. I mean, as a passive investor that's potentially looking to invest in something like that, where it's like, okay, I get it. They're getting $600 right now per door in rent, and the market's at $750. And here's the capex budget, right? And you got $1 million to do interior remodels on all the, on 50 of the units. There's 20 that have been remodeled, so that's their projections, right? But then it really comes down to like the plan's got to execute the way you think, right? I mean, that's really the thing is. So that means you got to be managing the syndicators, managing the contractor, making sure the turnovers are happening effectively, and that's the one thing that, like in a house flip, that you see that there's always delays, right? There's always overages in your construction budget, and so if you're a syndicator and you're doing these bigger value add plays, where you got these older buildings, I mean, that's probably the big learning lessons a lot of people learn, I'm guessing, is because that's where it's really you're either going to execute your plan or you're not, and if you don't, that's when they say, what do they say, the shit hits the fan, and you got to start doing cash calls and stuff. So if you're buying an asset like that, I mean, obviously you're getting you're forecasting what the turnover is going to be, and then how long it's going to take to tenant up those vacant units, and you gotta be realistic. You can't be aggressive with like, hey, we're going to get these. You got to be realistic with your expectations, I guess, as the operator.
So true, Beau. So very true. Again, I'd like to kind of say that I've been kind of, people are calling me now from all over the country and like that. I was there in Orlando, spoke at many panels, and I think a lot more people want to bring me on as, interview also. The key thing is be conservative. I mean, that's all I tell my syndicator students and also my relatives. I mean, everybody that I meet with who are syndicators like me, be conservative, under promise, over deliver, especially in construction cost, with the cost of, materials going up, the labor, all the problems you can have in jiving it all together, inspections also, city codes, inspections, lot more things go into the play. And it's better to really line item every single thing. Being an engineer, I believe in detailed analysis and execution. That is so important. So please look for those things from the syndicators who are trying to get that 70% or 60% building to 95%. You ask them, hey, give me the timeline. Give me the cost. How did you arrive at that point? So asking questions is the main thing, because everybody knows that, the building costs go higher, renovation costs go higher, problems get longer, bigger. And then once you start digging into, like, you have seen that, Beau, right? We look through the sheetrock, we tear it out, then you find some other problem which was not shown by the naked eye, and that can cost more money. And the floors and the subfloors. I mean, I've gone through all that, guys. So it's better. Sewers, lines falling down, the foundation problems and electrical problems and the circuit breaker boxes, not been working and you name it, and the air conditioning units on the flat roofs and leaking and all that stuff. So those things are so important that the syndicator or the person who's got this experience to outlay everything that can go wrong in the packet and plan for that amount. Time and dollars. Those are the only two things that go up in renovation. And the other thing is the leasing up, like you just said. They got to plan what month they're going to lease up, how they're going to build the curb appeal, how they're going to advertise, who is going to be doing all that, right? And the media, website, apartments.com, Google search, reviews, all that. So it's a whole gamut of things. We have 279 points now, 279 points as we now buy properties and we go through each and every line item to make sure we are doing it correctly from the day of LOI until the day we take over, and then a month after takeover and 3 months after takeover, all that. And then how
you have basically checklists for acquisition. Yes. During the acquisition phase, checklist for when you take over for the first month. What are the operations? This way you just go down the checklist and you say, this is done, this is met, this is done, this is done.
Yes.
That's pretty good. So this way you have checks and balances. So, and when you start putting together a bigger team, obviously in the beginning, it's usually just 1 or 2 people.
Sure.
And then as you grow, you have a team of maybe 100 people when it's all said and done, or 10 people in that manage one complex. Then you have your accounting department, you have your construction. So yeah,
all that, exactly. Payroll is huge. Payroll takes so much time every 2 weeks. Benefits, programs, profit sharing, all that stuff. So these are like running a complete business. That's what it is. Syndication, active syndication is a complete business by no stretch of imagination. Of course, you can give the product for managing outside, which I don't recommend and I don't do it. But the key thing is you can bring better returns when you are self-managing. You can get to the situation, the problems much faster than a company that's going to look at your business, and all those stuff. So, we have been very fortunate to put it all together.
Very cool. Very cool. So the Jake and Gino event was in Orlando, or where was it?
It was in Orlando at the Gaylord Palms. Beautiful place. Oh my gosh, I loved it. Atrium, very, very beautiful. If anybody's there in Orlando, guys, you go to Disney World or like that. I know my family went to Disney World when I went to Jacksonville to look at 4 properties, 4 new ones. Oh my gosh. This is on top of what we just got under contract, 35 million one. We just closed on 52 million one in end of June or July, let's say. And now we got 3 more. We are going to put LOI coming up Monday or Tuesday. Look at that. So we'll have 1 already raising money, then 3 more, I think close to $100 million is that one, all 3 together. So we have the bandwidth now. I've got so many investors who want to put in 1 million, 500,000, 400,000. I want to give shout out to Raj there in Tampa, Clearwater, Tampa. I don't know if he's watching us. He was able to orchestrate 55 doctors. My gosh, the cream of the cream was there that night. 8:15, I reached there. I talked to them. Literally, I talked to them for 1 hour and 15 minutes. And it was the appetizers, then dinner, Indian dinner afterwards. And we passed out investor qualification form. You're going to totally amazing. Doctors writing out, filling out. We want to invest $1 million, 500, 200, 300, 700. Oh my gosh, we couldn't believe it. And out of 55, probably 35 already said they want to invest with Raj and me, my partner there. So that's what is happening. TJ Hines, I was there also in Tampa last week. I'm just kind of giving you a little rundown. And he had 45 to 50 people there. And everybody was so excited there also. TJ is coming from a flipping business. Actually, that's what he's known as, Mr. Flipper. And then now he's converting them all into multifamily. Then I spoke also with Dumel's plan, high net worth group, very elite, valet parking place, everything. So Dumel and his wife arranged that with high net worth investors, and I spent time with them. That was on Thursday. Then Friday, Shweta, Dr. Shweta Patel, she planned out also. I don't know if she's watching me. What a tremendous, she got about 16 or 18 doctors also at her place and had appetizers and wine and other stuff. We had Damien, my good friend from EQRP, come live through the Zoom on the screen, big screen. And then I kind of shared with them how the doctors can invest money into syndication. After they get the control of the checkbook of their retirement, they could invest with syndication, not with me or other people also, you know. So it was very exciting week. Then I went to Houston, met with people over there, and I've got some things on the social media. I signed some books, signed a lot of books, by the way, this trip. So it was exciting.
That's great. Yep. And there you go. Right. And that's going back to that book I was talking about. You're doing the exact, you set your declaration years ago and you're executing your plan, and you know, you're going after it every day. And I think we all need to take a note on your work ethic, Vinney, that you know, people always tell you, I want. Well, if you want it, you got to go get it, you know, and you know,
so,
I think
so true. So
yeah,
true.
and I mean, we all struggle. I think we all have struggle. We all have, you know, I was talking to somebody today at the gym this morning, very successful guy, and he's like, you know, he you know, he makes millions of dollars a year, but he says, yeah, we all have the same issues. I go to sleep stressed out sometimes, you know, and you know, and so we all have to overcome whatever obstacles they are in front of us at the time, and they all, you know, sometimes you got to take yourself out of the equation and just like, okay, it's not really that big a deal. Let's move forward, right? So whatever you're doing in your life, just you got to move forward. You didn't start out, you know, years and years ago being successful.
Not at all. Not at all.
You got the mindset and you kept going and going and going and going. And even today, where you don't need to work anymore, you're even more driven now because it's you're helping others. The more people you help, you know, the more people that help you, right? Essentially, it's like it's you got the momentum going. And I think a lot of us that are listening, you know, we go, God, how does he do it? How does he do it? How is he always so happy? How is he always so positive? You know, and it's just like, you know, once you get to, you keep going and you get better 1%, or, you know, 1% a day or 1% a week, you know, over time, that's the compound effect. And then you're doing $50 million deals. You know, your first deal might be a small house that you flip. And then your next deal is a fourplex, and you go, okay, well, these are great, but you know, it's still a lot of work, and I'm not going to get to my cash flow unless I start buying big units.
So true, Beau. You're so right about it. I mean, you know, what you just said is so amazing. Let's just grow, guys. Everybody, 1% a week. 1% a week times the whole year. That's 50% better. I mean, isn't that tremendous? We'll be a different person. I promise you. If you really talk to yourself in between these years, Zig Ziglar, my great mentor, talked about stinking thinking, right? It's neck up is where we really have the stinking thinking. Let's just get rid of that. And let's just make sure we really are applying ourselves, looking at our value in this world, our self-worth, our self-esteem, and self-confidence. All that is together is going to make us great, reach our goals, and bring the positiveness into the world all around us. Oh, by the way, my new book is coming out, Positivity Brings Profitability. And those of you who have seen my first book, thank you so much. Syndication Made Easy, Apartment Syndication Made Easy on apartments, I mean, on Amazon. My third book is called Enthusiasm Makes a Difference. I've been called Mr. Enthusiasm. So I'm writing a book on that, and I hope you would like that. But if you would like to reach me or Beau, please text the word LEARN, LEARN, learn to 474747, or you could email Beau Straight. Beau, you want to give your address, buddy? Oh, I mean, the information about your
Yeah,
website.
feel free to. I like to be called or text 925
Yep.
852 8261 925 852 8261.
I love that. Love that. I will give out again. I know I've been told not to give my text number out. My teams are there. They get my phone and all. It's 925-766-3518. 925-766-3518. I just did it because you did it, Beau.
There you go.
I get a lot of texts coming in, but that's okay. We are here to help, and we are going out. Beau and Bobby Sherman, you and I, right? We are doing November 4th, 5th, and 6th in San Jose, San Mateo, and San Francisco. So look forward to seeing lots of great people who want to really live comfortably and do the independence, financial independence.
Very good. Well, it's lunchtime, so I'm gonna go eat some food and go crush it the rest of the day. Thanks everybody for watching. We'll see you next time.
Thank you. See you next week, guys. See you next week. Tune in. Bye-bye, Beau. You're great.
Bye.
Thank you. Bye-bye.